You want to make money but only have the free version of TradingView? Then this video is for you, as I will show you a simple strategy for beginners that only uses 2 free indicators on TradingView. It's so profitable that it allowed me to make a 400% profit starting with just a $100 account. Relax, get your popcorn ready, and watch this full video because I'm about to share trading secrets they don't want you to know. Welcome to my channel, and today, as I mentioned, I'm going to teach you a trading strategy for beginners that uses only 2 free indicators. I know you're going to love this strategy since it has a high success rate and impressive results, and I'll also explain how to set it up, what indicators we should use, why they're special, how to trade with them, and the incredible results you can achieve. So, click the like button and let's get started. The first thing we're going to do is open TradingView, which we already have here. We're going to go to indicators and use 2 indicators in this case. The first one we're going to use is the Z-score probability by Steve, which we open here, and we already have it. Now let's open the second indicator, which is called the twin range filter by calling Makey, and we'll open it here as well. As you can see, there are simple, short and long signals. So the first thing we're going to do is go to the Z-score probability settings. Let's open it here, and what we'll do with this indicator is go to the bottom and remove these 2 options. Then click OK, and now we have the indicator cleaned up and simpler to understand. The second thing we're going to do is go to the other indicator, the twin range filter. We'll go to settings, then to inputs, and change the fast period to 50, slow period to 35, and slow range to 3. Once we have that, we click OK, and it's all set. The next step is to understand the strategy. To do that, we first need to understand this second indicator, the Z-score. I'll make it a bit bigger. This Z-score is an indicator that deals with probabilities, as the name suggests. In green, we have a higher probability of a short, and in red, a higher probability of a long. So what we're going to do is go back to settings and change the colors to better understand the indicator. We'll set it to green here and red here, and the same for the other settings. Once we make this change, we'll understand the indicator much better. Now, the first thing we need for a clear entry is that, in this case, if we want to go short, it should be above the line, and in a very dark color. The darker, the better. If it's red, that's great, but if it's orange, it's less ideal. And in this case, I recommend you never enter in green areas. Let's see a clear example, which would be this one. Here we have a green zone, then a red and orange zone, and importantly, this color should always be below the line. If it's above the line, like this case, then we wouldn't enter. But we can look for an earlier example like this one, where we see an orange zone, but it's above the line, so this doesn't work for us. What's the second requirement for an entry? We need one of these short or long signals. For example, here we see we're in a red zone, above the line, and the color is very deep orange. So here we could try to enter, waiting for the short signal. Once the signal appears, we go for the next candle, meaning once it closes and gives us the short signal. We enter on this candle. We enter here. Let's shrink this since we don't need it so large. And now we'll see how we should manage these entries. The first step is to set the stop loss at the previous high, or just a bit above it. That looks good. And the second step is to look for a 1.5 or 2 ratio, depending on the risk you want to take. I think you can go for a 2 ratio with no problem, so let's look for that, which would be here. We see the 2 ratio here, and here we'd have our first winning entry. We see it's above the line, in an orange zone, and we have the short signal, meaning all 3 conditions are met for an entry. Let's look for another entry here, for example. We see a green zone that's very low, even lower than the red zone. So we're here, waiting. We see this, and here we have a long signal. It's very close to the line, and the color is orange, but that doesn't matter. Here we could enter. So we go for a long position, entering on this candle, setting the stop loss at the previous low, and raising it to a 2 ratio, which would be here. So here we'd have another successful trade with a 1.42% profit. For example, here we have a long. We wait for this first. We see it's in green, but we're in a very low zone, and it's above the line. So we wouldn't enter here, though it would be a winner. But we only enter when all the conditions align for better statistics. Here we can see another entry example. We see two entries in green. We wouldn't take this one because it's already at the line, but we could take this one. So how do we do it? We enter on the next candle. It looks like it's going to close, but we have the stop loss here and set the 2 ratio. We move it up to here and we'd see another win, this time smaller at 0.6%. And what have the results been after performing this strategy 100 times in a row? First, we have a 61% success rate, which doesn't seem much, but once we see the profits, which were 400%, meaning we started with $100 and they ended with 97, giving us a profit factor of 3.113, we see it's a very good strategy, and above all, very safe and easy to understand for beginners. Thank you so much for watching this video. Remember to hit like, subscribe to the channel, and see you in the next video.